Facebook is suffering a major financial blow after months of punishing headlines about privacy and content concerns. Its stock plunged up to 24% in after-hours trading yesterday. That was wiping out as much as $150 billion of the social media giant's market value in under 2 hours. This comes after Facebook announced second quarter revenue missed Wall Street expectations by around $130 million, and growth in the number of active users is slowing down. CBS News contributor Nicholas Thompson is Wired's editor-in-chief. Good morning.
Morning, Norah.
Is this the accumulation of essentially missing those earnings and what has been months of terrible news?
Yeah, it's all of this has come together into a very bad day for Facebook. They've had much lower operating margins than they had before. User growth is not so good, and it looks like the new products they're rolling out are not as profitable, and so the market completely freaked out. To put that number in context, the amount Facebook's stock declined in market cap is larger than the entire size of McDonald's. I mean, that is a huge drop, and it could end up being the largest drop in history.
I saw one headline that said Facebook gives up privacy over profit. Is that a good way to put it?
That is a good way to put it, because part of what's happening is it turns out it's harder to make money when you put user privacy first. So after GDPR, after Facebook started really solving the problems that it has, it turns out you can't make as much money in the long run, and that is partly what the markets are reacting to.
And is that why those apps have not been blockbusters for them, because they're just not able to make that kind of money, or they're just not very good apps, the new things they've been rolling out?
So what's happening with Facebook is that the new stuff, right, like the stories, right, which is Facebook's big priority, where you put in what you did during the day and it disappears, is much harder to monetize than newsfeed. And they're not making as much money on Instagram, even though it's a hugely growing product, as they did on newsfeed.
And they're spending more on security, another thing that hurts the bottom line.
Right. So the good way to look at it is Facebook is spending tons of money to fix all these problems. They're going to keep spending this money, which means they're going to be less profitable. That is the positive way to look at it. But the negative way to look at it is this is just a terrible time right there.
Yeah, but they have to be doing the hula over there that they've got Facebook. I mean, that they have Instagram,
Instagram and WhatsApp and Messenger, right? I mean, they have 4 of the 6 biggest social platforms owned by that company, so they're going to be okay in the long run. One thing that is incredibly interesting about this is the stock is now lower than it was January 1st. Employees, some of them are paid based on bonuses and how the stock does over the course of the year. So if the stock continues to be down, that has a real effect on their ability to retain people, which is the hardest thing for them.
All right, Nick Thompson, thank you so much.
Thank you.